Here's a lowdown on top macro triggers that may move market on Monday. This report was compiled from agency feeds. U.S. tariffs against China today. Dollar firm, oil down. U.S. President Donald Trump is likely to announce the new levies as early as Monday, reports Reuters quoting sources. The tariff level will probably be about 10%, the Wall Street Journal reported, below the 25% U.S. had been said to be considering. The WSJ also reported that China may decline to attend trade talks due next week as Beijing won't negotiate under threat. The dollar index, DXY, against a basket of major currencies, held at 94.965, well above Friday's 94.35. Global oil prices eased in early Asian trading on additional tariff concerns, outweighing supply fears from upcoming sanctions on Iran. Brent crude oil futures dipped 16 cents to $77.93 a barrel. WTI futures fell 20 cents to $68.79 a barrel. States to miss FY19 fiscal targets. Funding of farm loan waivers, poll-related spending and other populist measures are likely to ensure that states are set to miss their fiscal consolidation targets budgeted at the beginning of the year, says a report by ICRA. The state's fiscal deficit is primarily financed by issuing state development loans, SDLs. In April-August of FY19, gross issuance of SDL contracted by 3.4% to 1.32 trillion rupees, primarily led by a sharp decline in issuance by Maharashtra and Gujarat. Govt steps to check cut rupee fall. The Indian government on Friday indicated that it may curb non-essential imports in the weeks ahead and take steps to boost exports, besides announcing a number of measures to shore up the rupee and control the current account deficit. Analysts, however, have said the steps may not be adequate and even negative from a longer-term perspective. The decision follows a favorable legal advice and the interpretation of the Supreme Court's September 11 interim order that directed status quo on the matter. WPI eases, trade deficit narrows. India's wholesale inflation moderated to 4.53% in August from 5.09% in July, while trade deficit for August was at $17.39 billion, narrowing a little from preceding month's $18.02 billion. The Wholesale Price Index, WPI-based inflation eased on softening of prices of food articles, especially vegetables. WPI-based inflation stood at 5.09% in July and 3.24% in August last year. No cut in budgeted spending. Finance Minister Arun Jaitley has said the government will end the current fiscal year without any cuts in the budgeted expenditure as it is extremely necessary for economic growth. He said that the government has spent 44% of the budgeted expenditure till August 31 and will end the year without any cuts. Strategic sale of 4 AI subsidiaries soon. The government plans to soon initiate the strategic sale process for at least 4 subsidiaries of loss-making Air India, including Airline Allied Services Limited, Hotel Corporation of India, Air India Air Transport Service Limited and Air India Engineering Service Limited. Besides, plans are on the anvil for selling the headquarter building of Air India in the national capital as well as various other land assets and buildings of the airline in different parts of the country. The rupee may retrace up to 3% of its lost ground by the end of the calendar year. The Revenue Department has instructed its field formations to collect safeguard duty on imported solar cells, withdrawing its earlier direction issued a month ago regarding suspension of the levy. Private sector HDFC Bank has become India's most valuable brand for the 5th year in a row, with a 21% rise in its brand value to $21.7 billion over the previous year. HDFC Bank retained its top spot in the WPP and Cantor Millward Brown's Brand 75 Most Valuable Indian Brands ranking that was started in 2014. India climbed 1 spot to 130 among 189 countries in the latest Human Development Index released last Friday by the United Nations Development Programme. Within South Asia, India's Human Development Index (HDI) value is above the average of 0.638 for the region. Top Video TV's NTORQSXR review. Top quote: A lot of froth has got wiped out of the market fundamentals. Rupee up. The rupee on Friday surged by 34 paise to close at a one-week high of 71.84 against the US dollar on positive macro data and hopes of policy intervention by the government to defend the volatile currency. Long-term G-Sec yields mixed. Government bonds (G-Secs) surged following rising demand from corporates and banks. The 7.17% G-Secs maturing in 2028 went up to 93.8200 rupees from 93.7700 rupees, while its yield held stable at 8.13%. The 6.68% G-Secs maturing in 2031 climbed to 87.7400 rupees from 87.6400 rupees, while its yield softened to 8.23% from 8.25%. Shorter-term G-Sec yields down. The 6.84% G-Secs maturing in 2022 rose to 95.2900 rupees from 95.2200 rupees, while its yield went down to 8.17% from 8.19%. The 7.59% G-Secs maturing in 2026 and the 8.33% G-Secs maturing in 2036 were also quoted higher to 96.4625 rupees and 99.6200 rupees respectively. Call rate steady. The overnight call money rates ended steady at its Wednesday's level of 6.30%. It resumed higher at 6.50% and moved in a range of 6.50% and 6.25%. Liquidity. The Reserve Bank of India (RBI), under the Liquidity Adjustment Facility (LAF), purchased securities worth 39.56 billion rupees in 7 bids at the 3-day repo option at a fixed rate of 6.50% as on today, while it sold securities worth 216.12 billion rupees in 37 bids at the overnight reverse repo auction at a fixed rate of 6.25% as on September 13. Market movers. Buy Pole Jolt, cruising on growth and more aftermarket. Market movers.